All right, all right. Good morning, everybody. Hope you're doing well. Please type 1 if you can hear me because, well, I just touched my mic, so hopefully it is not cut out. Hope y'all are doing well. Hope you all are having a good trading week. I've got a good stream lined up. You all seem to really enjoy the last stream. Seem to really enjoy having a bunch of learning documentation tossed into the beginning of the stream. I'm going to do it again. We're going to look at the 3-day cycle today. And we're going to associate it with every other template in a way that is very easy to understand so that you can put it all together. I'm going to set my alarm to this banjo tone. You joke about it, but fiddle and the banjo is very, it's gem worthy. It's good gem music too. First red day on gold, we're going to take a look at it. Silver is a good one today too, that I'm looking at. Gonna let some people come in. As you come in, please feel free to say hello. If you're new to the stream, say hello. Make sure you all like the stream as you are coming in. I do appreciate it. Let's get some people flowing in here. Hello, hello. Good morning, good morning. These streams are so helpful. Good. That's why I do them. Figure if I do them 2 times a week at least, and people just show up consistently, you'll catch on eventually. Hopefully. Good stuff. Good morning, good afternoon, good evening, ladies and gentlemen, wherever you are in the world. I hope you're doing well. Happy Friday to you. TGIF, all that good stuff. All right, just a reminder, this is not financial advice. The information on this channel is provided for education, informational purposes only, without any express or implied warranty of any kind, including words of accuracy, completeness, or fitness for any particular purpose. Please read this. 3, 2, 1. All right, it's going away. Good morning, everybody. We're going to start out the stream, as always, with some kind of information, some kind of value added to the stream, and then I'm going to add more value to the stream if I can by looking at all the different pairs that I typically watch going into the New York session, so that way you all are prepared, I am prepared, we're all prepared, and we can trade the session effectively on a last day of the week, Friday, okay? Every single Friday, every single week, every single day, the market does 3 things. It only is capable of doing these 3 things. And if we can avoid one of these situations, then we have a 1 in 2 chance of getting the right condition. So if we have a trade set up for either condition, and maybe we even say, okay, well, if one of these conditions shows up, because that's the larger 3-day opportunity that I really want to see, and I can cancel out the other one, then we have a higher probability of success, and all is well and right with the world. All right, so there are some things that the market can do. It can either break out, pull back and trend. It can break out, reverse, or it can stay inside of a trading range. So if we are in a breakout market going in one direction, one of the setups that we could maybe be looking for on the following day are trend trade opportunities. Things like they break the high, they pull back, they start to trend. They pen through the high, they pull back, they start to trend. Maybe they even break out of the previous day's high and pull back and start to trend. All right, some different variations of the same theme. This, of course, can go to the downside as well. You're going to see me talk about this exact template on a few pairs today. All right, we could also have the reversal templates where maybe the context of the market is important always. Maybe we had a up-moving market, and 2 days ago or a few days ago, we had a break of the previous day's low, and then the next day breaks out. And then on the current day, they try to go higher, and it can't seem to get there, and it starts to roll over and fail. Or maybe the previous day, we had the previous day's low break, and then that day was the breakout day. And then today starts to roll over, triggers previous day's low, pulls back, and then goes vertical. Gold a few weeks ago. All right. Maybe we have first red and first green day templates. All right, with those same exact two things. I just showed you two scenarios, but you can add signal days in there, and that's where it makes it really simple. All right, we have those two scenarios. Those are pretty much the two scenarios that we're looking for. And then you can chuck a signal day in there where you have a large range pumping day, a day that attempts to go higher and fails, closing below the opening price for the day. And then on the following day, looking for that trade back down towards the low of the week or where that pump began. You can do this on the other side as well, a large range dumping day. A day that has traded through previous day's low and failed, closing above the opening price, and then looking to go back up towards the high. We saw this on oil this week. We also saw it on natural gas this week. All right. Now, I'm going to talk about the 3-day cycle real quick because it all plays in. It's all going to intertwine and intermingle with one another. All right, we can look for Monday, Tuesday, Wednesday opportunities. We can look for Friday, Monday, Tuesday opportunities. We can look for Thursday, Friday, Monday, Wednesday, Thursday, Friday. Like whatever 3-day combination that you've got, there can be some sort of associated template as long as you're looking for the right things, of course. All right, 3-day rectangles. Okay, think about my playbook and the way that I've built it or whatever. You know, I've got those different examples in there of certain instances where this exact thing has happened. All right, peak formation high, peak formation low within the week. Monday, Tuesday, spike the high, spike the low, consolidation in the middle. Starts to ascend and goes vertical. Day 1, day 2, day 3 of the cycle. Okay, even over here, notice how they triggered the previous day's high, giving us lots of information about what to look for on the day. All right, on the day, again, peak formation high, peak formation low. Once I get to the day, I start looking for structure. Internal structure on the day, intraday structure. We have the larger setup building my overall larger thesis. I'm trading based off of those larger setups, but on the day, I have to make sure and use information to confirm and read price action, and I need to be able to figure out where I'd like to get in based off of that price action. And I do that using bars and also structure, highs and lows. All right, so on the day, they're making higher highs and higher lows. We have a peak formation high in a channel. All right, very simple stuff. Same thing, peak formation low, peak formation high, 3-day rectangle. Notice that we have the peak down low, and then we get an inside day. And then on the day itself, what happens? What could have told me that I'm looking for the short trade? They triggered the previous day's low. All right, that's that lower low. I put this little line down here. Pump began from, looks like a few days ago, but in reality, at the very least, we trigger the previous day's low, pump it back up, 1, 2, 3, price action, structure, all right, high of day. We make the lower low. We go back to the high. Think about that slideshow that I just put out a few weeks ago where I talked about structure and how you could save hundreds of hours of time if you understand this one thing. It wasn't clickbait, it's the truth. Lower low, it goes back to the higher high fails, breaks back down and goes vertical. All right, looking for the setup. Same thing, that's just on the day. All right, all of these are for the 3-day rectangle. Okay, trend templates. Again, markets that are in breakout. Markets that are in breakout, okay? We closed in breakout, then we get an inside day. Then we try to go higher and fail and get the squeeze back down through the low where that pump began, the trend trade. Breakout, day 1, day 2, day 3 trend. Okay. Again, breakout, the market can only do 3 things. Breakout, trend, reverse, or stay inside of a trading range. They broke out. I project that level across. They pulled back, making higher highs and higher lows. Remember, at the very beginning of the stream, I drew you a previous day's high and said, well, they can pin, break out, pull back, or they can break out and pull back and trend. Break out and pull back and trend. All right, Shaky, good morning to you. All right, same thing. And then I'm looking for structure on the day. They're making higher highs and higher lows. And then I'm looking for squeeze patterns. Okay, same thing. Higher high, pull back to a higher low. All right, and then looking for squeeze patterns. Sending lows, trapping shorts, going vertical. Okay, reversal templates. Triggering of previous day's levels, like a previous day's low maybe. and then going back to the high and failing and making lower lows and lower highs. Again, going back to where that pump began. Oh my gosh, that line was the least straight I could have possibly been. Very simple templates. We were going up. We triggered the low. That could be a lower low. Again, go back to the slideshow. It's going to save you 100 hours. We tried to go lower. We can't go any lower, so we're going to go back to the high and see if we can go higher. The market goes back to the high. It fails to go higher. Okay, if we can't go any higher, we tried to go lower first. We couldn't do that. We went back to the high. The high failed. Let's go back to the low and figure out if the market has juice to go lower. All right, it's constantly trading between a high and a low. The market only does three things, okay? On the day, looking for structure. Lower lows and lower highs on the day before I start looking to enter in a short position. Higher highs and higher lows on the day before I enter a long position. We're making lower lows and lower highs. I look for 3 pushes back to the high at a certain time of day. Okay, I'm looking for evidence that people are trapped. I look for traps above push 2 and peak formation highs. This is a double top. Okay. Resetting the cycle, day 1. In a trend, going lower. All right. We triggered the high. Let's see if we can go lower. Okay. We can't go any lower. Let's go back to the high. All right. They go back up in a big parabolic fashion. On the day itself, did we make higher highs and higher lows? Yes, we did. Okay. Trading back into the low. Push 1, push 2, push 3. And then looking for the squeeze, okay? We start making higher highs and higher lows. I look for certain times of the day, for certain things to have been completed prior to this, the open of the market. Okay, so we've already got the higher high. We've already got the 3 pushes into the low, and the market in the session is making higher highs and higher lows, and then it goes vertical. Every time the market breaks out, it'll go sideways, and then it will tend to continue. And that's where I'm trying to get in as it's exploding. All right, some more variations, all on the same theme. Different variations, same theme. We tried to go higher, day 1. This is another rectangle example. Some of you have heard me say this, and it makes me want to jump out of my chair when I see this pattern. Whenever you have peak formation high, peak formation low, and on that Tuesday, they also put in this insanely high and low spike, this tends to happen a lot of times, okay? Peak formation high, peak formation low, 3-day rectangle. Big, explosive, vertical move a lot of times. All right, and then where does it go? Back to where the pump began, or dump began in this case, excuse me. All right, hopefully this has provided some kind of value to you all, and maybe just scrolling through these. This is a slideshow that was on one of my videos way back when, 3-day cycle stuff, pretty sure. But just doing a little review is always great before we go into looking at the charts and determining, you know, are any of these showing up today? So I'm looking at a NASDAQ, or at the NASDAQ now on a 15-minute chart, and all of you should be standing there or sitting there or looking at the screen and going, okay, well, he's going to zoom out and look at the previous week's high and low first. So when I do that, what do you all notice about the previous week's high and low? Here's Monday. I don't know why my thing is not showing up again. It's being incredibly rude, really. Does this fix it? Okay, well, that fixes it. Previous week's high and low, we haven't triggered them. Okay. Is that ideal? I would say probably not, because there are going to be weeks where we're in between the previous week's high and low, and that's fine. But I like to see the week at least going unidirectional toward one of those levels and then maybe triggering it. With my webinar group this morning, we were back looking somewhere. And that's a common occurrence, and that's fine. But whenever we put in a high at the beginning of the week, we put in a low at the beginning of the week, and then we just sit on the inside of that. Again, the market only does 3 things, and trading range is one of those market conditions that I do not want to be a part of. All right. Trend trades, reversal trades, fantastic. Range trades, not really my favorite. All right, so we're in between a high and a low, and I can just move on. US 30. Okay, a little bit different than the NASDAQ. Yeah, we're on the inside of a previous day or previous week's high and low, but at least we've been in breakout going higher. 1 day of breakouts, 2 days of breakouts, 3 days of longs, or level 3 triggered into the market. Then we get a first red day. Now, two sides of the scenario, two situations that could be taking place. Number one, I've projected this level across. Why have I done that? The market only does three things. We're in breakout to the downside on a weekly level. And now we have gone back to the breakout level in a variation, right? Breakout level, puts in a low, goes back, push 1, push 2, push 3, first red day. And then now that means that today I would be looking for the market to make lower lows, lower highs, start going back towards previous day's low, and maybe even make a trend move or an explosive move back down towards the low of the week. Will that happen? I have no idea. Is that what I'm going to look for? Absolutely. Okay. Next, do I want to be completely blind going into this short or looking for the short? Do I want to be blind looking for the short? Absolutely not. What I do want to do is go into it with two sides of the scenario. Like I said at the beginning of the stream, I understand the larger template. I understand what I am looking for, but I don't want to be blinded by that and just aggressively trying to take shorts because I know that, or I believe that I'm right. I also see that we've triggered the previous day's high and we've been breaking out on a weekly basis, or a daily basis, to the upside. Now, the opening range breakout may have failed, which is another reason I kind of want to look for the short. However, we trigger the previous day's high and we're kind of just creeping our way down to the low, so I need to be careful. And hopefully that explanation makes sense to you all, helps, all that good stuff. All right, S&P, very similar. I can't really say much different about this one, other than we're kind of just sitting on top of the breakout level from Friday's high. We're still in breakout to the downside on a weekly scale. We still have 3 days breakouts or 3 days of longs triggered into the market. Yesterday was an inside day instead of a test of the high. But other than that, everything kind of remains about the same. Okay, yesterday was also that first red day. Okay, but everything's about the same. All right, I'm going to go to the Russell because that one is a little bit different and it's worth talking about. All of you right now should have jumped out of your chair and gone, wow, that one looks very different. Did I make a mistake? How was yesterday an inside day? Okay, I've not made a mistake. We're good. The low of day, the high of the day did not trigger previous day's high or the previous day's low. It's an inside bar, which means it's an inside day. Mammon. All right, Russell. Very similar to everything else, right? We've gone up 3 days, breakout, breakout, and breakout. Now, what was different about this one? Number one, this is the first time they've triggered previous week's high. If we've gone to the high for the first time, maybe we need to go back to the low to retest. Maybe. Right? It'll do that in a few different ways sometimes. We'll see if we'll go back down, but that's the idea. Number two, we've got 3 days of longs in the market. 1, 2, and 3. And kind of 4. Even within the week, we've got 1, 2, and 3. So that's good. Then we go back to the high, and the breakout possibly failed. We had a day that opened, tried to trade higher, closing below its open. We get a first red day. Then I come into today, and I see, okay, we've broken out to the downside outside of a previous day's low. So the previous day's low becomes the top of my box for breakout pullback. The low of the day becomes the bottom of my box. I look to take trades or low-hanging fruit down to the low of the day, and if I'm lucky, for an expansion of the range, back down to where the pump possibly began, which would basically put us back down at the low of Monday. Okay, so now I know what I'm looking for. Do I want to get caught in this thinking, oh, this has to go down 110%? No, absolutely not. Ikla, good morning to you too. But we're broken out to the downside, which gives me a higher probability with this index compared to the others. All right. Market only does 3 things. So that is what I will personally be searching for on this pair. Okay, oil. You can see my notes. I just finished doing this with my webinar group. So this was done, what, maybe 30 minutes ago? So these were my thoughts 30 minutes ago when I made this. Beginning of the week, we had a peak formation high that could have been the anchor point for a dump for a pump. Okay, then we come down, we trigger previous day's low on a Wednesday and give us a first green day. A day that opened, tried to trade lower at the low of the week and failed, closing above its open. First green. Then yesterday, we've evolved into explosive move, breakout day 1 to the upside, triggering where that dump began. Then today, we've triggered previous day's high. So again, the market is only going to do 3 things: breakout, trend reverse, or stay inside of a trading range. We triggered the previous day's high. Asia makes a higher high. London pulls back. Maybe New York will be the trade. I don't know. But I've got my 3 levels of drop indicated here. And I used the 100 pip box to do so. I looked and saw where was the peak formation high or the high of the day put in place. It was put in above 75, so I measured down 3 levels of 25 down to double zeros. We've came back down there and put in a low of day now. That's all I've got. That's all I know. Is this breakout level going to succeed? Is this going to turn into breakout pullback trend? Or breakout reverse and stay in a trade? Or breakout fail and reverse, maybe back down to where the pump began. Okay. Think about the 3-day cycle. The 3-day cycle slideshow that I just had pulled up when I went through the reversals. Please let me find it quickly and not have to sit here scrolling like a weirdo for extended periods of time. Yep, we're looking like option 2. There we go, reversal templates. All right, trigger previous day's low, breakout. Previous day's high, reverse. Okay. That's an option. Looks very similar to what we've got going on right now, but also, so does this. First green day, breakout day 1, trend. I'm just waiting for one of the 2 to happen, okay? It's pretty early in the morning to be making large decisions like that, but at least I know what I'm looking for, and that should help pretty well. Okay, natural gas. Breakout day 1 to the downside. All right, first red day yesterday. Natural gas going vertical. Okay. 8:30 in the morning? Sure. Love to see it. All right, Monday, Tuesday. Triggered the high, traded the low, put in a high and a low, pump back up. We had a breakout yesterday. Breakout may have failed. Okay, triggering the low. Well, there's the reversal template right there. I just showed. I pulled it up on the slideshow. Trigger the low, go back to the high, breakout. Breakout fail, lower low, lower high. This was yesterday, late in the session. Continuation. This one always moves at weird times. I've noticed that, natural gas. But there's the template right there. All right. Now we're broken out to the downside. First red day. Is this yeah, it is. This is day 3 of the cycle as well. Day 1, day 2, broken out down. Day 3, we pumped it back up early in the session. I think we triggered previous day's low. Yep. We were broken out to the downside as well. Breakout pullback, except maybe now that's not what's happening. I don't know. This is a 15-minute chart. We got 5 minutes till this bar closes, but certainly interesting. Let's go on to gold. Excuse me. Holy cow. All right, 3 days of breakouts. 1, 2. Yesterday was 3. We got 3 days of longs triggered in. A day that opened, tried to trade higher, closing below its open. All right, first red day. My big thing for today is we also triggered the previous day's low, which could be a lower low. Now, this is the first time they've triggered a previous day's low. Like we don't have a reference point for a previous day's low being triggered over here to make this a 3-day opportunity. We went from the low, we went back to the high failed, we pulled back down. All we have right now is a lower low, so maybe we're going to go back to the high first. That's something I'm definitely thinking about. But we also do have the lower low after 3 days of breakouts. So with the lower low, is it going to pump back up a little bit? And then kind of fail and roll over and then go back to where that pump began? I don't know. But that's what it's telling me to kind of look for, and the two things that I need to be thinking about. We triggered the low. Are we going back to the high? It's first red day, and we've triggered the low. Are we pumping back up for the continuation of that down? Maybe it's going to set up for Monday. I don't know. But those are the two things that I'll be looking for. And the reasons of why. I know somebody already asked me about gold, and hopefully that explanation makes sense. 3 days of breakouts. I'm looking for a lower low. We get a first red day, which is good. And then we get the lower low. We've triggered previous day's low. Are we going to pump it back up for the first red day trade? Or is this triggering of the previous day's low going to send the market back for a lower high or a higher high retest and maybe setting us up for next week? All right. Everybody, are we all 2 thumbs up on this? If you all have pairs that you want to see, please let me know. I'm nearing the end of this list, and I've somehow made it through in 30 minutes. Maybe I need to stop caffeinating before these streams. Who knows? Good stuff. Let's go to silver. Okay, silver, I've got a few things listed up on my screen as well. Very similar to gold, except for the conditions are a little bit different. This one was in breakout. We didn't close in breakout. None of these days have closed in breakout. And I had a few different options for this one. Let's zoom out, take a look. We've been in breakout to the upside. We closed in breakout last week. Okay, so we triggered the previous week's low here. We broke out. We triggered the previous week's high. Now we have 3 days of shorts in the market, breakout pullback on a weekly scale. Are we going vertical back towards the high? Number one. Number two, the market is making lower lows and lower highs. We're breaking down. On the day, we have also made a lower low and broken out a previous day's low. Are we going back to the low? Are we going back down? All right, really the only two options I have. Okay, so for either of those, you can kind of see what I was thinking about earlier this morning. This is a good short squeeze pattern. Lower low, higher high, 3 pushes back down. Breaks out, starts to ascend. They're trapping shorts. That's what I like to see. I like to see them punishing one side. But if they start letting those shorts out, something weird might be happening. And I might need to be looking for something different. Okay. All right, does anybody have any pairs they would like me to go over, or any pairs they would like to see? $76 people in the stream right now. Heck yeah. Love to see it. Thank you all for being here. Any pairs that you all would like to see? German. Euro USD. All right. The Russell just went down. Timeout. Let's go. Well, that's unfortunate, huh? It's not unfortunate. It's just unfortunate that it's happening at such a early time of day. But the thesis was correct. The thesis looked really good. It just happened in the wrong time. All right. All right, let's go back. Let's take a look at, what was it? Euro USD? Remember, the template is the template regardless. Looking for certain things based off of the template. If they happen early, so be it. But if they happen at my time, 9:30, then yeehaw. All right, I'm on a 5-minute chart. Let's get out to a 15 and take a look. We'll zoom out. All right, previous week's high has been triggered on this. That's good. And then we start making lower lows. Yesterday was the first day of breakouts down. We had a first red day on Wednesday. Okay, Wednesday was first red. Yesterday was breakout day 1. After breakout day 1, I project that level across. The market can only do 3 things. I'll measure up 3 levels. Now, this is US or Euro USD, so I might not get those 3 levels according to the 100 pip box. We're in a 25 pip box, though, and that's usually going to have to be the idea with Euro USD being a lower volatility pair. So we're at the high of that 25 pip box, and we're at the breakout level, and the market only does 3 things. We pumped it back up. Did it meet my entry criteria? Lower lows. Probably not. Maybe not. But that would have to be the idea. All right, we're in breakout down. 3 levels. We're at the high of a 25 pip box. 9:30 rolls around. We get the engulfment. It's not 9:30 right now. I know currency pairs tend to move a little bit earlier. I'm also terrible at trading A tops and V bottoms if I'm being 110% honest. So this would probably have not been the pair for me, but for some others, sure. Anyways, thought process remains the same. Breakout to the downside, 3 levels of rise. High of day. All right, so Australian dollar, New Zealand. Okay, yesterday we got a peak formation low that went back to the high and then has failed today. Which would have probably been a very good trade in Asia if I was watching or anybody else was watching in Asia. Because the market broke down, started making lower lows and lower highs at the end of the day. Pumped it back up and failed. We opened up. No, actually, this has been better and definitely in London. Because we're making lower lows and lower highs on the day, and then they popped it back up, and that higher high fails. Okay, so we've got the failed breakout scenario in a down moving market as well, which is even better. Let me get rid of these 100 pip box lines. Freaking me out. All right, breakout. Oh, this is a good template. Okay. I'm glad I took it. See, that's what I'm talking about. When I've got too many things on the screen, it freaks me out and I can't see. I go blind. All right, Tuesday, we're in breakout to the downside. All right, we're making lower lows and lower highs. We pop back up and try to break out higher. The breakout fails and starts making lower lows and lower highs. And when that happens, we can only go back to the other side of the range, typically. So this is actually a very valid 3-day template with that thinking for whoever asked this. Did it move well? That's a different story. It's very choppy. This pair in general is very choppy. But the idea, if I were to remove the candle, which by the way, if you didn't know this, you can see the templates just by doing this. Okay. You can see templates by doing this. If I were to put the close up here for each day, you can see the templates, which is pretty cool. The candles for me are just a price action piece on the day to help me figure out if I'm actually going to enter. But you can see the templates based off of open, high, low, close just by looking at a chart like this. Am I suggesting that you go and do that? Of course not. I'm just saying that for relevance, this chart doesn't really move that well. The candles themselves are a little bit choppy, but the template itself was valid and good. All right, I just want to point that out. Anyways, let's go to GJ. Okay, first red day breakout, day one to the downside on Wednesday. Okay, breakout day to the downside on Thursday. I project that level across. Market only does three things. Measure up 3 levels from the low of the day. Let's see if it's perfect. Oh, it just might be. Okay, peak formations were put in at 50. 3 levels of rise. This is GJ, so it might be 50 pip boxes. I don't really look at this pair that often. Let's do 75 first. Puts us back at the breakout level. Level 1, level 2, level 3 puts us at 25. Good Lord. That's pretty perfect. We've got the peak formation, breakout, 3 levels of rise, on the day, 3 peaks, and a lower... It hurts to see. It hurts to see. I don't know if anybody traded this today, but when the template's this good, I just want to get out of camera and start snapping shots. All right, the lower low, the breakout, and 3 levels of rise and 3 peaks on the day. Timing-wise, not really the best. It's not in the session, unfortunately. But if you were to insert proper timing, this is perfect. All right, lower low, back to the high. 1. Oh, man. 1, 2, 3. Traps above P2. Market falls away, does not return. 1, 2, 3. Breakout, fake out bar at double zeros. Entry. Okay, anytime the market breaks out or breaks down, it'll go sideways. Beautiful. Absolutely beautiful. I don't know if you were looking at this for confirmation of what happened up here, or if you're looking at it to keep trading it. This is my trade right here. It just happened earlier in the day. Who was this? Mantis? Peak high, peak low, triggered the low. I'm looking at the footsie right now. There's the template too. Peak formation low. We go back to the high and fail. We were in an up moving. Man, this one looks good too. This is obviously a London setup, but market's been going higher. Okay, we triggered the previous day's low. We go back to the high and it fails. First red day. Goes back into consolidation sideways and breaks down. Perfectly timed. It breaks down. Anytime the market breaks down or breaks out, it's going to go sideways. It goes sideways and then continues to go vertical throughout the London session. Beautiful template. Beautiful 3-day opportunity. 3 days of build-up. Perfectly executed timing-wise for London. Okay. Uh, 100 pip box is going to freak me out on this one. Let's get out of this. Okay, German. 3 days of breakout. 3 days of breakouts higher. Trigger. American indexes are really lacking this week, it looks like. A lot of the other instruments are doing pretty good. Other indexes. Breakouts to the higher. Trigger the low. That could be the lower low. It's also a first red day. Okay, also the breakout has now failed from Tuesday's high. Beautiful. Okay. Pop back up. I wonder if it popped back up in 3 levels. Sorry, I'm just kind of sitting. We got some time, so I'm sitting here fanboying over these some of these setups. P formations put in place. Was that 75? Around 75. We'll call it double zeros. Nah, we'll call it 75. 50 pip boxes would put us back up at 25. 25 is the level. Okay, so it came up, trap volume above double zeros and at 25, broke down, went sideways. Anytime the market breaks down or breaks out, it'll go sideways. It goes sideways and then follows through, back down through the low. Do I take closing price into consideration? Yeah, absolutely. More for certain situations, not every single setup I'm looking at, but yeah, in a lot of situations, some. Okay, ladies and gentlemen, I hope you've enjoyed this stream. I hope it has been beneficial to you. I put a lot of stuff. If you're late to the session, go back and watch the beginning of the stream. I put some really good information in there about the 3-day cycle, about the 3 things that markets do. I hope this has been useful to you. If it has, please let me know in the comments. Like the stream as on your way out. Just hit the little button. It takes 2 seconds. I do appreciate it. I do these streams for those of you who are silently watching in the background every Wednesday and Friday at 8 a.m. Eastern Time. I had to start a little bit late today because of the webinar, but normally, like next week, for example, every single week it'll be 8 a.m. Wednesday and Friday Eastern Time. You'll have a great weekend. Have fun. Be safe. I'll see you next week. Bye-bye.